Right. Well, good afternoon, guys, and welcome to a second edition of the Black Friday promotion of our premium service. This is a fantastic opportunity to get a really nice discount for an extremely worthwhile product and service from FX Street, where you get instant expert access to us analysts. Many of you, I'm sure, who are already with us. Um, will be benefiting from the services. I don't know if there's anyone here that's from outside of the premium membership. Maybe you could raise a hand. But essentially, this is an opportunity for any one of you to claim this offer. So I'm going to share a link. Let me come out of here. Oh, wrong one. Out of here. And this is the link where you can pick up this offer. So I'm going to put it into the chat. Bear with me. Hold on, I'm having a few technical issues with this. Right, over there. So that's the link. Okay. So what I wanted to do was go through what I'm looking for on a Friday. And specifically, what I want to talk about are levels and trading from specific levels. Okay. So on a Friday, let's get to a chart, and I'm going to give you an example of last Friday's setup. This particular one was on the NAS 100. But essentially, what I'm looking for are setups. And over the course of the week, you've got order flow for which you can rely on and work from. And every day that you come into the market, there are three levels that everyone can see, which is the high of the day from the prior day, the low, and where it closed. And you're looking to trade from those levels. Okay, so I'm looking for on a Friday where you've got Wednesday and Thursdays order flow, including Asia and London. By the time you come into the US on Friday, you've got all of that information and the footprint of the market from which to trade from. And I'm looking for 3-day parabolic trend or reversal trades on a Friday. Okay, so on a Friday, by the time you get to Friday, you can have 3 days of breakout traders in the markets, which can make for a trend or a reversal trade. Okay, so let me know if you've got any questions with regards to that. But looking at this example here, and I don't know whether you can see what's going on here. If I'm sharing I am sharing my chart, right? You can all see that chart, yeah? I've got two things going on here in this, and I'm not sure if you're seeing the right thing, but presumably you can see that chart. So let me know if you can't, otherwise I'll just continue. So here we are. We've got Wednesday. Wednesday essentially in this 3-day strategy resets the week. So Monday is your opening balance, and Tuesday combined with Wednesday, you've got 1, 2, 3. Monday, Tuesday, Wednesday. When you get to Wednesday, we can reset. And Wednesday becomes day 1. Tuesday becomes day 2. And when we come into Friday, it's day 3. And these are the days where we've got opportunities to see, very profitable setups that can run 50 pips, 100 pips. If you're trading an index, it could be 300 points. But you can see moves from one extreme of a range to another. So looking at this one here, for example, and this should make it a bit clearer. What we've got is a scenario where the market has come up and broken above a level, right? This webinar is about levels. So the levels that we're looking at here are last week's low, or the prior week's low, and the prior week's high. And what we've done, so this is last week, by the way, so this is a replay. Where did that red line come from? Get rid of that. So over the course of that week, what we've done is we've broken the prior week's high, okay? Which was on, when was it made? It was made on Friday. So we've broken that high, and what I've said before to those of you that follow some of my stuff is that most breakouts will fail. And the reasoning behind that is essentially you've got higher time frame traders. So I'm a day trader and I'm trading the US session. When we break a level such as last week's high, I know that there are traders that are trading on longer term trade plans, such as swing trading or position trading. So they're watching for these breaks of these types of levels. Yesterday's high, last week's high, last month's high, and they will get into the market on that breakout, and they will leave their stop below that breakout level. So that's where the market goes to. It goes for the money. It's a zero-sum game. So it targets wherever the orders are. So if you've got an order to buy the index, right, so it's shot up. Sorry, you've got an order, so you've bought the index and it's shot up, and you've got your sell order below the market. The market, its function is to go and fill that order. So this is essentially what we're using as day traders. We're using that information and the footprint of where the money is in terms of the order flow. So on Thursday, we've got a closing price from Wednesday. So if you're trading on Thursday, you can be using that closing price as a support level, as an anchor. So if you're coming in to, say, the US session, and you want to, your thesis is that we're continuing heading higher, and you want to buy low on the session, you're going to use that closing price as an anchor and get into the market depending on the behavior of price at that level and at timing, so time of the day. So for me, it would be 9:30, 9:45. Those are the sorts of times that you want to be getting involved, because that's where the highest volume is going to be, and you can get in and out of the market on the back of a nice move. But that was Thursday. What I want to talk about is Friday. So if we forward into Friday, let's see. Well, now Thursday, where did it close? Right, it's closed below Wednesday's low, but it's still above the prior week's high. Okay, so this market here, all right, this is all volume of buyers coming into the market on that breakout. So the market now is expected to come back in and stop them out, which it does. Right now, I'm not suggesting that you short the market just because you expect the market to come down and stop those out. This is about trade setups at certain levels. So when we come into Friday now, what we're looking for are, where did Thursday close? So I've got this indicator here that tracks the close. So it closed down here. So on Friday, we've dropped in the open in Tokyo, and we're now below the closing price. What I know at this moment, I mean, I'm not going to trade Tokyo, but if I was trading in Tokyo or London, what I know is that we're below the closing price. We are testing last week's highs, and we've got longs in the market from a number of days gone by within all of last week's range. So all of that is money to target. And what I'd be wanting to do is position myself at a level So if this were to continue lower, I want to be getting in at either the prior day's low, or better still, I mean, if it were to pump up maybe to the Wednesday closing price, that would be great, to be selling up as high as possible. But this is the thesis at the moment, while we're below the closing price, is to be short. Now, I don't trade in Asia, I don't trade in London. So we get the benefit trading in, you see, there was the trade in London from where? The closing price, short. But in the US session, we get the benefit, there it goes, we get the benefit of not only the order flow from Wednesday and Thursday, we also get the benefit of Asia and London. Now, what's happened here is London's dropped from the closing price, so that was a trade, and it's stalled at last week's highs. So these levels are playing a role, and this is why levels are, well, depending on how you want to trade, but for me, trading from the levels are a higher probability method from which to profit, right? So as we come into the New York Open, the index pumps up into these shorts from last week's high. It breaks back inside of the range, the prior day's range. So we're back inside of Thursday's range. So the thesis is now, well, perhaps we're coming all the way back up to stop out the shorts. So this is a short squeeze that's being played out. Now, for me personally, I'm not going to trade at this particular hour. This is an index, and I want to trade the indexes, the stocks, the US stock market during the Wall Street Open or a window there within. So I'll be monitoring what is happening here. I'll be monitoring this closing price. I'll be monitoring Wednesday's closing price, which I've drawn there with a blue line. So there it is with a red line, but I've just put a blue line over the top of it so that on Friday, I know where that closing price is. Okay? Because I'd expect that the market, if it comes up to it, there will be some kind of reaction. And at that point, I've got to decide whether I'm going to be going long or short, depending on the behavior of price and where we've come from and so on. So if we continue to fast forward, and we'll come down now to a 15-minute chart. So I'm using the 1 hour chart to get a quick glance of where we've come from on a higher time frame. But now I'm starting to break down into the price action on a lower time frame, the 15-minute chart, to get a better an up close view on what's going on. So this is now the Wall Street Open. And what's happened is that we've come off the last week's high. We've rallied up into the closing price. Now, if we come down to a 5-minute chart, right? So at this stage, I might be sitting on my hands because I want to see how this price is going to react around that closing price, right? So is it going to give me an entry, essentially, from the closing price? It may just run away, and that's fine. And maybe I can be looking for shorts from yesterday's highs. Or if it's going to give me something within the open to continue with what seems to be a market that doesn't want to fail and come back into last week's range, and it wants to keep going within the trend. So on Fridays, remember what I said at the beginning, you're either going to get a parabolic trend trade, which this certainly looks like it's going to be, or you're going to get a parabolic reversal trade. So what's happened is that the market's tried to reverse, but it's not, is it? Right? It may do. I mean, it might come back in on the inside of that closing price, and then I'll be looking for how it behaves around the closing price, potentially as a resistance, And if there's enough order flow that's being built up around that closing price and it's failing to break higher, then I'm looking to go short, depending on the chart patterns, the price action, and actual patterns of the candles. But that will be at a later webinar. We'll go through that. So at this point, I'm still monitoring the price, and I'm wanting to see if we're going to get a reaction around the closing price. So at this stage, the market is not really giving us too much information one way or another. It's tried to run higher. It's trying to come lower. But that closing price remains, I'm trying to get this on the, remains as a key level. Now, as you can see, at this point, where it's failed, it's come back, built up, broken structure, and continued. And that's the trade. And it depends on timings as well, but I want to go through that at a later stage. But I just want to highlight how we're using levels to trade from. And what would I be targeting at this point? What would I be targeting? I'd be looking to yesterday's highs. And indeed, it goes up and continues higher, and on it goes. So that is a parabolic trend trade on a Friday, which is essentially what we're looking for. Trend trades or reversals with 3 days worth of order flow, very strong movement on a day 3, Friday. So do we have any questions within all of that? And if not, we'll just move on and we'll just have a quick scan of where we're at across the board. And let's see if we've got any prospects of a setup for ourselves on Friday. And we can start with, does anyone care to suggest a pair that you want me to look at? And we'll look at it with regards specifically to levels. Gold, okay. Sterling Oz, okay. Aussie, fine. So with this gold, what have we got? We'll look at it from Wednesday, okay? I'm going to mark the closing price of Wednesday. That is our opening range for the midweek. So there it is there, that red line. So when I come in tomorrow, I know that the mid-range closing price is here. And that could well act as a magnet for the price to come back into and retest. Okay, now we've got on Wednesday, we've got longs that came into the market in a continuation from Monday. They made a fresh high, right? The market's pulled back and it's found balance in that low, which coincides with the Asian or the last prior Thursday's close. Now it's moved higher on Thursday, so we've got more longs in the market. And where might it be heading? Well, last week's highs. So the thesis is at the moment, if we are remaining on the front foot, because in fact on Wednesday it closed lower, but the price rallied. So for me, that is indicating, that's a strong signal that this market, rather than wanting to come into the shorts, into the longs rather, it wants to keep going up, right? It's attempted to come down, failed, and risen to the upside again. So for me, I'm going to be, at this point in time, biased to the upside, but I don't just want to buy it wherever. I need to see the price come into a level. So for me at the moment, the level of interest is yesterday's highs, so Wednesday's highs. So that's why I've got this indicator that marks it off, you see? So that white line marks it off. It tracks. This white line here was um, Tuesday's high, right? So this white line is tracking the highs of the week, highs of the days of the week. And also this green line is as well. So that makes it very easy for me to see that. So I can just glance at the chart and be in anticipation of this price coming back in to test the breakout high. And if the price reacts accordingly bullish around that on Friday, then I'm looking for the parabolic setup to target last week's highs. Okay, so there's still, a bit of way to go. It seems as though the market is going to close around about where it is. Now, I will also use that closing price as a reference point. So now I've got two reference points when I come in on Friday in the US session, which will be over here somewhere. So we'll just mark it off. 7 o'clock a.m. New York. So what I'll be looking for is, has the price stayed up above Wednesday's highs? Did it close where? Okay, so if this is the close, did it break that? Did it come down, break the close? Because that also will be important information. Because if it does, it may mean that the stop hunt is done and that we're going to deteriorate and come lower. If the closing price remains intact and we've got a coiled market below it, yes, of course it can go one way or the other, but it depends on the behavior of price at a particular time of the day. And for me, it will be between 8 a.m. So I'm looking the market from 7 and I'm seeing where it's come from. But from 8 a.m. until 12 in the afternoon, say, I'm looking for how is the price reacting to the closing price and the high of the prior, 2 days ago. I also will have information as to the high of today up here. So I'll mark that red for resistance. And I'll have the low, which is already there, as you can see. I'll mark that as green. And for some reason, it's not giving me the low. Okay, because we haven't closed yet, so that's fine. But it will be there. That's Wednesday's low. So that red line now is turning green will be today's low. So that's more information. So I've got, not only have I got Wednesday's closing price, I'll have Thursday's closing price, and I'll have Thursday's high and low and Wednesday's high and low as well. So all of those levels there, I'm going to be monitoring to see how the price is reacting. And if the price is reacting bearishly, and if it finds that the closing price is acting as resistance, and we get a little break on the inside, okay, and we might well pump up, and then my thesis therefore is I've got to be looking for shorts, and I'm targeting the levels that I've just indicated from prior days. And it may well be that you can leave a trailing stop on, because what I want to do is take money off, pay myself for my analysis. I can add to the position if it's getting confirmed that it's continuing. And if there's real momentum in this, and you can judge that on how the candles close per hour or 15 minutes per hour, we might be coming all the way back to retest that low. And therefore, we're taking the money, the stops that are positioned below each low of each day. So I hope all of that makes sense, and that should have covered gold. We can look at sterling Oz. Right, so this is quite a colourful looking chart. Well, that's because today the candles so far are yellow, because that shows me that we are inside of yesterday's range. Now, that would be, therefore, giving me information for Friday that we'll have stops below the inside day and above, because you've got higher time frame traders that are going to be looking at that particular day and looking for the breakout. So what I'll be looking for on a Friday is for the price, as it's within last week's range, right? So we're at the top of last week's range. So we've come up, broken the high, right? So that happened on Tuesday. We've pulled back on the inside, and we've paused probably at a level, of course. So Wednesday's low. So Wednesday's low, the prior Wednesday's low, is obviously going to have stops below it. We've paused there so far. We've pumped up into this short position. So that's a short squeeze. We're continuing to squeeze, but we're still not breaking yesterday's highs. And lo and behold, that there is the high of the prior week. Okay, so if we fail to break up here today, which we have because we're about to close, then my thesis is that we're going to come up, take out the stops, and potentially even come all the way back down and take out these stops. Because the market wants to find the orders, rebalance itself, and get to a level. So considering we've come right up towards last month's highs, then perhaps we're coming back down to last month's lows, or we could well be holding at this closing price. We could pump up, take out the stops, and continue. But again, it all depends. I mean, me trying to pick a direction of where it's going to go doesn't really offer anything, because you're going to be, that's a 50-50 scenario, if not 70-30, going against you, trying to forecast where the price is going to be at any given time. But what you can do, what is more certain, is knowing where the levels are and monitoring the price, how the price behaves at those levels at a particular time frame. So again, for me, my time frame is the US session, and I prefer to see how the US session starts to open, and then at 8 o'clock you've got some information from that first hour of trade, because it's put in a high and low of the day, and you can trade from that low and high of the day. So far, at 8 o'clock, it might be building up on the high of the day so far. So for instance, look at what happened today. So the market opened 7 o'clock. It made a high, that blue line there. I'm just going to put in it made a high here. So that, at that point, if I do a replay on this. So at that point, that is my new high of the day. And I might want to use that as a reference point for a trade before the Wall Street Open. So I might want to go short from the high, or if it breaks the high, I might want to go long from that high. So it's breaking the high, and I want to get in the market and go long from that level. And look how that price reacted. 9:15, 15-minute rotations, strong move from the level. So this is why I'm trying to highlight that these levels are important to track. Okay, so overall, let's just give an overall analysis on this then. Come out of bar replay mode. and we'll come out to a less complicated looking chart. Right, so we've got shorts that are in the market and they're being squeezed. We've broken structure, this trend. Okay, so we broke structure, which was over here. And we subsequently continued lower, lower, and lower. We've come back up to that structural point. Okay, and this again is a level. And we're going to now monitor how does the price react around this level. So we've popped up, we've come back down below, we've come up again, and we're hugging that level, that breakout level. So that's going to be an important factor for tomorrow. So when you come into, if it's the US that you're going to trade, how has the price reacted from that level? Has it flown away from it so that it indicates that the market wants to keep going? Or has it popped up and stalled and, um, has it struggled with the high, let's say, of Tuesday or Wednesday, whatever that might be? So levels, monitoring the levels. Okay, but as far as where this is going to be tomorrow, by the time we come to the US, we don't know. But when we are in the US session, we will have all of that information from this week, Wednesday, Thursday, and what's happened so far on Friday. And we're expecting one of two things, either a parabolic trend or reversal trade. Okay, that's what you get on Fridays, most of the time. All right, the Aussie. Okay, so this was the cover image thumbnail that I made for this particular webinar. So open, high, low, close. So this is the open, high, low, close strategy that we're talking about. So what we've got here is a situation where we've got Wednesday, Thursday, and we're looking at Friday. Now, what could happen on Friday is the market could pump up, fail at the high of today, so whether it could happen in Tokyo, it could happen in London, it may not happen until the US session. But what I'm looking for is how does the price react at the high of the day? Okay, and if it's acting as resistance, then my thesis is that we are pumping up for a parabolic reversal trade. And whether I can get in at the high of, I mean, that would be ideal, but it may have already started in London. So at that point, I'll be looking, if this is the closing price, I'll be looking to see how the price behaves around the closing price in London, sorry, in the US session, which will be over here somewhere. I'm trying to line it up exactly. So I hope this is making a bit of sense. So Tokyo, London pumps up. Sorry, bear with me. I'm trying to do this with the times. There. Right. So this is Friday in the afternoon. Right, so we're over here, aren't we? In the morning, Friday. So it could be that Tokyo pumps up, London pumps up, we keep pumping, and lo and behold, we can't get through the high of today, and we get the sell-off in the US session. So we're selling from the level. for the parabolic reversal trade. Okay, so we'll wrap up with looking at the euro. So with the euro, very similar scenario to the Aussie. We've got longs in the market. We'll just bring up I want to see how we've reacted to the levels. So at this point, we are, right, so we're well above last week's highs in that strong surge to the upside on the back of the US CPI data. Okay, so therefore, you'd expect the market to rebalance, and this might give us a sell-off similar to what I just showed you on that Aussie. But again, it depends on how the price reacts at the levels, right? So we've got an inside day on Wednesday. So we know that there are going to be traders that are trying to sell, buy, and you're going to have orders all across and below where that trading activity has failed to so far go one way or the other. So more than likely, Friday's going to come up for the stops up top. I say more than likely, it's a high possibility. So coming up for the stops, sticking at that closing price, finding support there. This is just a scenario. Coming up for the stops, setting us up, coming back inside, and then at the level, at the high of the day, perhaps giving us a parabolic move into this long position, clearing out the imbalance, retesting the prior week's highs, and then monitoring again, how does the price react at that level? Do we continue lower? Are we looking for a reversal back into those shorts, back into the low of today, perhaps? Back into the low. All right. So any questions on all of that? Is it relatively clear? Great. Right. And are any of you in here, are you not yet members of the premium service? Because I can share that link again of the offer before we wrap up. Let me put it in the chat. Okay. Because what I'm showing you here is essentially what I'm trying to show each and every day live for you guys to benefit from and learn from, and potentially, if you want to, adopt it as your strategy. But you've asked for US oil, so bear with me. Right, so I'll just do a top-down analysis on oil. So this is the weekly chart, and we have come down into the origin of that weekly rally that broke structure over there. So it broke this resistance. So I'd expect, given that it broke that resistance area, the origin to be a firm support, right? So we're coming into potentially a firm area of support. So therefore, same thing. I'm looking for levels and how will the price react to the level. So this is the weekly chart. So this is a weekly level that I'm going to draw on here, and I'm going to make it green as a support, and I'm going to give it a dashed line so we can identify it as that weekly level, right? And then we can come down to the lower time frames, and we're looking to see how we're just going to drop right down to the 4 hour, and we're going to see how the price is reacting to that level. Right, so far we've dropped very heavily into it, and we're getting a reaction. It's acting as support. Okay, so we can come down to a 1 hour chart, and we see that indeed the bulls are really trying to protect that level. So are we going to now start stacking up on top of that level to move up? Right? So that's what we're looking for, because we've got this price imbalance that the market may want to come up and rebalance on Friday. Now, if we come out of that template and look at this, we can look at where we're positioned within the week. So we've got Wednesday, Thursday, right? So we've got shorts that came into the market over the course of Tuesday, Wednesday, and Thursday. Now, this doesn't necessarily mean we have to reverse, but you can see now how we're starting to build a picture from that weekly chart. We know that this is going to be a potentially a strong level of support, and we've got shorts in the market. So where's the money? Potentially coming back up. We might need to come up, collect those orders to fuel a heavier side of supply to really come down and take on this support level. So again, I'm going to be monitoring how is the price reacting. So we're closing potentially here on the day. So when I come in tomorrow, I've got that closing level. Okay, so that's my sort of anchor point. I've got that weekly level, that green line, right? And then I'll have the high of today, Thursday, which coincides, by the way, with what's that? Wednesday's closing price. So that will be a very interesting level as well to monitor, to see how the price reacts to that, potentially as strong resistance. All right. So there are prospects, therefore, of a short squeeze over the course of the day, back up to test the high and the low and the closing price. That cluster of levels could be a very important area. And then we can watch how the price behaves. If it breaks that level, comes back into it, perhaps we can add a position if we're already long to keep coming up, because maybe we want to come back to the highs and the origin of that sell-off. That's one scenario. Or if the price is finding firm resistance, then maybe then we're looking to short into this demand area. And we might want to get short at that level, or it might be at last week's lows. So we could be getting, watching the price, how it behaves around that level for the short. Okay. So I think we can wrap up there. And that's sort of stage 2 of this course on trading day 3s. The next one, let me just look it up. I will be covering, just bear with me 1 second. Yeah, preparing for day 3s. So I'll be taking this to the next step, and we'll be looking at specifically the behavior of price at the levels and the candlestick formations that we're going to be looking for that are going to confirm our thesis, either bullish or bias, and to pull the trigger at the level. So we're either going to get bullish, or in this case here, bearish. We're looking for bearish candlestick formations, or if we break above it, we're then looking for bullish candlestick formations and looking at the behavior of price at that level. So that's what I'll be covering next week. So are there any other further questions before we move on? You're asking if I can recommend any books or education relating to intraday FX gold trading. Well, I can fully recommend FX Street. There's a lot of education on the website and certainly within our premium service. It really depends on what my question back to you, Jay, would be what time of the day can you dedicate to trading, first of all? Could you, I mean, presuming that you're starting out, I don't know, um, but I'd hazard a guess that, you may not have all morning to sit at the screen. Maybe you have a day job and therefore perhaps you'd be looking to swing trade, or if you've got the time to intraday trade, then by all means follow us. That's what we're doing in the premium service. We give out signals that can last, anything from a result in within half an hour to a few days. I mean, I specifically at this moment in time, I'm coaching this particular strategy, which is a US. Well, you can use it in London, you can use it in Tokyo, but um, I'm based here in the US time zone. So um, the trade setups that I identify are based around the New York Open. The New York Open, and I want them opened and closed within the session. Ideally, as soon as possible. 50 pips. I'm looking for these parabolic moves that can, be over and done with within an hour. Um, okay, so I'm searching for months now. I have some time off work. Okay, excellent. Well, if you want to go um, deep on this, I mean, I don't actually have any material specifically related to this strategy. But what I can suggest is, I mean, are you a premium member with us? Are you are you monitoring what I'm doing on a daily basis? I mean, I send out videos. I've got a YouTube channel, which is there on the screen, RJB Forex. So any of the stuff that well, not all of the stuff that I show you guys, I put out live. So, but the best thing to do would just stick with us in the premium channel, and fire your questions away and monitor what we're doing on a daily basis. Great. Okay, good stuff. Um, so I'd recommend, looking up high and low closing price trading strategies, and it's essentially that's all it is. I like to also use weekly levels, monthly levels. I like to use a top-down analysis approach as well. I do like to have that bias coming into the day. It just gives me that peace of mind to pull the trigger. It's an extra, it's a confluence of information that helps me with peace of mind to pull the trigger at the level, at the timings, when I see certain price action and market structure and candlestick patterns at the levels. Okay, guys, so we're going to wrap it up there. Tomorrow morning, I will put out the usual analysis just ahead of the 8 o'clock time slot in New York, which will be an indication on what the dollar is expected to do for that day, reason why, and how we might be able to position ourselves across the board um, over a number of various instruments, such as the indices, gold, oil, the currencies, and so on. So we'll see how we're all set up, and we'll be basing our setups tomorrow on what we've just talked about today, using Wednesday, Thursday order flow as a gauge, uh, and if we get any signal days, and that's something else that we're going to cover in one of these webinars. I think it'll be the one after the next, be the final one, in fact, where we're going to tie all of this together, and we'll end up with a very powerful strategy for trading, not just Fridays, Wednesdays as well, because you've got Monday, Tuesday, Wednesday, 1, 2, 3. So Monday day 1, Tuesday day 2, Wednesday day 3, and then we reset on a Wednesday, calling it day 1, 2, 3 on a Friday. So these types of setups, we can look for parabolic trend or reversal trades on both Wednesdays and Fridays that are regarded as day 3. And when we combine the order flow with a signal day, and we'll talk about that at a later stage, you're going to have a very powerful tool when you come in to trade your particular session. Okay, so with that, I'll wrap it up. Thank you all for being here, and we'll see you tomorrow.